October 14, 2014, New York City. The 38th floor of the JP Morgan Chase headquarters. A room full of senior risk analysts and vice presidents are staring at a projection screen. The number on the screen makes no sense. $82 million. That is the exact amount of unsecured credit card debt written off by the bank in a single fiscal quarter. But it isn't the amount that has the executive sweating. It is the profile of the defaulters. None of them were high risk. None of them had a history of late payments. Every single one of the 2,400 accounts responsible for the $82 million had a FICO credit score of 780 or higher. They were perfect customers, immaculate financial records, flawless payment histories. And then, over a synchronized 48-hour window in September, all 2,400 of them maxed out their credit lines and vanished. The bank dispatches private investigators to the home addresses on file. They find empty lots in Delaware, mail forwarding centers in Wyoming, abandoned storage units in Nevada. The investigators try to track the social security numbers. They cross-reference the names with state driver's license databases. Nothing. The birth records. Nothing. The realization hits the boardroom like a physical blow. The $82 million wasn't stolen by hackers breaching a firewall. It wasn't embezzled by an insider. It was borrowed by ghosts. And the architect of this phantom empire is sitting in a beige cubicle 3,000 miles away, eating a lukewarm turkey sandwich. 6 years earlier, Chicago, Illinois. Elias Thorne is 34 years old. He has a master's degree in applied mathematics. He works as a mid-level risk actuary for one of the big three credit bureaus. He makes $64,500 a year. He drives a 1998 Honda Civic with a failing transmission. Elias is invisible. He speaks softly, rarely makes eye contact, and leaves the office exactly at 5 p.m. But inside his mind, he holds the blueprint to the American economy. Elias understands the algorithm. The U.S. credit system is entirely built on a digital illusion of trust. If you want a mortgage, a car loan, or a premium credit card, you need a high FICO score. To get a high FICO score, you need a history of borrowing and repaying money. But Elias knows a secret. The algorithm does not care if you are a real human being. The algorithm only cares about data points. The system is a machine, Elias explains to a skeptical colleague over cheap coffee. It doesn't have eyes. It doesn't ask for a blood sample. If data goes in, trust comes out. They run background checks, Elias. They run database queries. If a social security number is generated and a name is attached to it, and a utility bill is paid under that name for 6 months, the machine logs a person. It creates a profile. The system literally hallucinates a human being into existence. Elias goes home to his cramped one-bedroom apartment. He opens his laptop. He decides to test the hallucination. He takes a real, unissued social security number belonging to a demographic subset that hasn't been born yet, or an elderly demographic that passed away decades ago. He pairs it with a fabricated name, Arthur Pendleton. He attaches a birth date, an address at a commercial mail receiving agency in Reno. Elias applies for a $200 secured credit card under Arthur Pendleton's name. He uses his own cash to secure the line. The bank's automated system queries the credit bureau. The bureau has no record of Arthur Pendleton, but the bank issues the card anyway, logging the new data point. Arthur Pendleton now exists. This is the incubation phase. For 6 months, Elias uses a secured card to buy a single $12 subscription to Netflix. Every month on the 14th, he pays the $12 bill in full. The algorithm watches. It notes the on-time payments. Arthur is responsible. Arthur is trustworthy. Month 7. Elias applies for a standard unsecured credit card. The algorithm approves it. Limit $2,000. This is the cultivation phase. Elias automates the process. He writes a simple Python script. The script uses the $2,000 credit line to buy small denomination grocery gift cards. The script then pays off the balance 3 days before the billing cycle ends. Month 12. Arthur's FICO score hits 720. Month 18, Arthur's FICO score hits 790. Arthur is now a prime borrower. Elias sits at his desk in the dark, the blue light of the monitor reflecting in his glasses. He clicks a button, submitting an application for the highest tier rewards credit card on the market. Approved. Credit limit $35,000. Elias doesn't smile. He just opens a new spreadsheet. One ghost took 18 months to build and yielded $35,000. It is a flawless proof of concept, but $35,000 is amateur money. Elias needs to scale. Las Vegas, Nevada. Elias quits his job at the credit bureau. He moves to the desert. He leases a 4,000 square foot climate-controlled commercial warehouse under the name Apex Data Solutions. Inside the warehouse, there are no employees, just server racks. 300 high-end processors humming in the dark. This is the ghost farm. Elias isn't building one Arthur Pendleton, he's building 15,000 of them. He codes a master architecture, an artificial intelligence that acts as a digital shepherd. The software generates synthetic identities by the thousands. It cross-references zip codes to ensure they're spread across all 50 states. It opens bank accounts using deep-fake-generated voice verifications and forged utility bills. The servers apply for microloans. They pay them back. They apply for retail store cards. They pay them back. The servers talk to the credit bureaus millions of times a day. They mimic human behavior perfectly. Some accounts carry a 10% balance to look authentic. Some occasionally pay a day late, triggering a minor fee, perfectly simulating human error. By 2013, the ghost farm controls 15,000 synthetic identities. The average credit score of these ghosts is 785. The total available credit line across the network is hovering around $400 million. Elias is sitting on a digital nuclear weapon. Now he initiates the third step, the bust out. You can't just wire $400 million from credit cards to a personal checking account. The fraud detection algorithms would freeze the assets in milliseconds. The money has to be washed. It has to become tangible. Elias sets up a labyrinth of shell companies, fictitious consulting firms, wholesale electronics distributors, and logistics vendors. He triggers the script. Over the period of 3 weeks, the 15,000 ghosts begin to spend. They buy high-end servers from Elias's own shell companies. They buy massive quantities of gold bullion shipped to bonded warehouses in Delaware and Zurich. They max out cash advances at specific, compromised ATMs. The credit cards are drained. The plastic is maxed out. The money flows out of the American banking system through offshore payment processors and converts to Bitcoin, bearer bonds, and solid gold. And then the 15,000 ghosts simply stop paying their bills. By 2015, the financial sector is bleeding. Special Agent Sarah Jenkins sits in a windowless office at the Financial Crimes Enforcement Network, FinCEN. Her desk is covered in printed transaction logs. They don't exist, junior analyst tells her, dropping another file. We subpoenaed the DMV records for a batch of 40 names, complete ghosts. The SSNs are valid, but the people attached to them are synthetic. It's a Frankenstein profile. Who's cashing out the gold? Jenkins asks. Shell companies. They hit the credit limits, buy bullion, and the bullion gets picked up by armored transport companies hired through encrypted emails. By the time the bank realizes the account is defaulting, the gold is in a vault in Switzerland. Jenkins stares at the data. It is too perfect. Normal fraudsters get greedy. They make mistakes. They buy sports cars. They leave physical trails. This architect is clinically disciplined. But no system is perfectly insulated. If you run 15,000 automated profiles, the law of large numbers dictates that a statistical anomaly will eventually occur. Jenkins stops looking at the money. She starts looking at the metadata. Pull the IP logs for the account logins, she orders. They're all masked, bounced through proxy servers in Russia and Eastern Europe. I don't care about the origin. Look at the latency. It is a brilliant pivot. Jenkins realizes that if a server in Nevada is routing 15,000 logins through a proxy in Moscow, the round-trip signal time, the ping latency, will be nearly identical for all 15,000 accounts. A human logging in from a real computer in Ohio has a latency of 45 milliseconds. A human in Florida has 60 milliseconds. Jenkins runs the diagnostic. Agent Jenkins, the junior analyst points, look at the monitor. Look at this. 12,000 of these have a fixed latency of exactly 212 milliseconds, every single login, every single time. The proxy mask hides the location, but the identical latency proves they're all broadcasting from the exact same physical room. They have the anomaly. Now they need the trap. January 12, 2016. FinCEN coordinates with the top 5 credit card issuers. They identify a fresh batch of 2,000 synthetic identities currently in the cultivation phase. The accounts are primed, holding about $50 million in available credit, getting ready for a bust-out. Jenkins doesn't shut them down. She authorizes a silent modification to the banking algorithms. When Elias's script attempts to execute a massive wire transfer to buy a pallet of gold bullion, the bank system generates an automated error code. Transaction flagged, manual verification required. In the Nevada warehouse, alarms flash on Elias's monitors. Elias is cautious. He knows the protocol. Burn the accounts and walk away. He already has $120 million safely laundered offshore. He doesn't need this $50 million. But Elias is a mathematician. He hates an unbalanced equation. He hates a broken script. It's just a KYC flag, he mutters to himself in the empty glow of the servers. Know your customer. A simple phone verification. He makes a fatal error.
He decides to manually override the flag. To do this, he can't use the automated proxy server. The bank's new security protocol requires a localized IP address matching the ghost's registered state. The ghost is registered in California. Elias leaves the warehouse. He drives his unostentatious Honda Accord across the state line into California. He pulls into the parking lot of a Starbucks in San Bernardino. He opens a burner laptop. He connects to the public Wi-Fi. He types in the credentials for the synthetic identity. He clicks Verify. In Washington, D.C., a red light illuminates on Agent Jenkins' screen. Got him. San Bernardino, public network. 3 minutes. That's all it takes. Elias is sipping a black coffee, watching the progress bar on the wire transfer reach 99%. The front doors of the Starbucks open. 4 men in tactical windbreakers walk in. They don't draw weapons. They don't shout. They move with clinical precision. One agent unplugs the laptop. 2 agents flank Elias, pulling his hands behind him.
Elias doesn't fight. He doesn't look surprised. He just watches the screen of his laptop go dark as the agent closes the lid. The trial is quiet. There is no media circus. The banks explicitly request the Department of Justice to keep the details classified. If the American public truly understood how easily the credit system could be hallucinated into giving away $250 million, consumer trust would collapse overnight. Elias Thorne is charged with 140 counts of wire fraud, bank fraud, and identity theft. "You didn't just break the system, Mr. Thorne," the federal judge says during sentencing. "You manufactured an entirely fake population to rob it blind." Elias stands perfectly still. "The system wanted data, Your Honor. I just provided it." Elias is sentenced to 14 years in a federal correctional institution in Colorado. But the story doesn't end in a cell. 6 months into his sentence, Elias is escorted to a private visitation room. Waiting for him are 3 executives from the very credit bureaus he exploited. They place a thick stack of printed code on the metal table. "The latency patch isn't holding," the lead executive says, his voice devoid of emotion. "The new syndicates are randomizing their ping times. We're bleeding another 40 million a month. We need to know how you structure the secondary proxy loops." Elias looks at the executives. He looks at the code. A slow, almost imperceptible smile touches the corner of his mouth. The authorities had caught the phantom, but the system was still broken, and the only man who knew how to fix the machine was the ghost who built it.